join me as I give a warm welcome to the stage to deliver his keynote, How AI and Analytics Are Revolutionizing Esports Strategies, Yat Siu, the co-founder and chairman of Animoca Brands.
There's a special one. So I'm going to talk about the tokenized future instead, and I'll keep it pretty quick. I know everyone's interested here on blockchain and crypto gaming and what is the meaning of tokenization. So let me first talk a little bit about sort of how we think about tokens first, as I talk about basically some of the implications as we believe that basically tokens is the absolute future. So first, I think all of you, when you're thinking about basically blockchain games, there's obviously a token component, whether it's an NFT or whether it's basically a fungible token. But what's interesting about a token to understand is that it's a way, and I'll describe this a little later, in which you can basically own a piece of digital property, which basically has certain attributes. And one of the things to think about the attribute that because it's a token and because it's something you can own, it becomes a capital asset, which means it has both a financial and a utility use case, right? And it's kind of very much, what you think of what's happening in some of the conversations in the US, it can be treated almost like a kind of digital commodity for the most part, right? So the token basically is both a mechanism in which you can have price discovery, in which you can have property ownership, which you can leverage, for instance, but it can also be used in applications or used in the development of products and services, which I'll go into shortly. It means, though, that for the very first time, we have the ability to own an asset that is representative of the network itself. Now, what I mean by that? Normally, when you think about network effects, it's very difficult to actually have a way in which you can enumerate the value of the network in and of itself, right? But actually with tokenization, you can actually measure the strength of the network. You have a way in which you can value them based on PE multiples, based on maybe the profit of the business, maybe there's a customer number, but you can't really measure the network effects because there's no way of trading that, right? Whereas in a token, actually trade the value of that network effect. One of the examples I wanted to put out here is that when you look at the value of a network effect, it's kind of looking at the value of a social construct, right? And it doesn't come from the value itself in terms of a return multiple. Like, for instance, you wouldn't be buying Ethereum token because you can stake it for 2% yield. That's not where the value comes from. But there is a value generated from basically several components. One of them is the network effect itself, as in how many users are using it and how amplified are the usage of those network effects. The second one is, of course, that what kind of value is generated from each connection. Are they high value? Are they low value connections? Just like an economy. And of course, what blockchain also enables in a token infrastructure is it allows for the rules of self-organization at a scalable way, right? The rules are very, very clear, which basically allows for these networks to operate. And in some ways, that's actually how governments run as well, right? If you have a very well-run government, you have laws, then essentially the rules of the games are known, then everyone can basically build and scale essentially those businesses around it. And that's basically what a blockchain, a tokenized infrastructure can deliver. And when you have a token, actually it functions like a digital commodity, much like a regular commodity. Based on the pricing of the token, you can know sort of how to allocate resources. It signals information in the form of attention, in this case, and it affects consumer behavior. The price of Ethereum or Bitcoin will tell you something about where to allocate your resources and what kind of attention you might have in the crypto community. Or if it's a gaming token or it's whatever, they basically create information for you. And we think of tokens basically as a kind of open poly market, like an open prediction market. But I want to give you an example of the network effect basically that may not be obvious, because many people think about sort of, should the token have value? And maybe they don't have to have value. Like a stable coin doesn't need to have value per se. The value of a tokenized currency, like a stable coin, is its reach in distribution. Today, there's over $200 billion, give or take, in terms of stable coin out in the world. But what's relevant is not the 200 billion and the fact that they are amongst the largest buyers of T-bills. What's relevant is that there's close to 150, if not 200 million people in the world. Most of them may not even have a bank account in places like Africa, Southeast Asia, and South America, who now have a dollar. And what that actually means is that the dollar itself has become more powerful. It's not making the dollar more valuable as a unit, because it's dollar, but it makes the dollar more powerful because now you have 150 to 200 million more people around the world who are using the dollar and growing up with the dollar. And so its network effect, its reach of the dollar is now much wider because it's been tokenized. And it doesn't need an intermediary. If you're in a place like Africa, you might not be able to switch to a dollar, but with the stablecoin, you have that. It not only extends the reach and power of the dollar, it also extends the reach of the dollarized economy. Because if you're now trading in dollars, that customer in Africa or in South America could now become your customer because he's also trading in dollars. And one thing to also note is that if you are not thinking in terms of stablecoins, you're in danger as a nation anyway to be essentially dollar colonized through essentially stablecoins. So it's an illustration of the power of network effects, not necessarily just in terms of value accrual. And we can see other things that you can do when you tokenize something, innovations where when you tokenize things like student loans. What's really interesting here is that when you basically take a $3 trillion industry and you tokenize that in the form of student loans, you actually make the loan portfolio available to places that normally wouldn't have a bank account and can't actually be receiving access to these kind of loans. Basically on chain, you can do this again, to like literally 1 billion people around the world who do not actually have normal financial infrastructure that require a bank account or maybe a credit rating, and that can basically all be done on chain, in this case on EDU. All right, so the big trend that we see in tokenization, and I'll get soon to the point in terms of what it all means for all of us, is another big trend, which is RWAs, real world assets. And this basically sort of goes towards the theme around basically the meaning of what we think is happening with more institutional adoption for crypto and blockchain, broadly speaking. When you take a real world asset, this is something the institution understands. Is it a real estate? In this case, these are HELOCs. Or is it maybe art? Or is it a share price? Is it stock? Is it equities? When you basically tokenize that, you basically not only reach all these new audiences in all these countries that I just mentioned that might not normally be able to buy that, you also bring in the institution who understands that this is something of value, right? So we're moving to an era where it's not just network assets, it's actually real assets that have some fundamental value that you may agree with, but then they have the power of tokenization by expanding the network effects, by reaching new audiences. So you want to tokenize your assets because one, you want to reach these customers in Africa or South America that you wouldn't normally be able to do so. That's kind of one example. But the second thing is also, you want to be able to reach a new audience that wouldn't normally basically want to buy your assets because it's not in a form of, in tokenized form. So I'll give you an example. In South Korea, there's about 60% of the youth under the age of 30 almost exclusively trades only in crypto. So if you are an equity or a commodity that is not tokenized, they're just not going to buy your product, right? They're not interested in a Charles Schwab account. They're not interested in setting a regular trading account. They want it in a tokenized form. And that's just what they're doing. And that's kind of where the youth is going. So if you want to sell your product or asset to Gen Z, it has to be in the form of a tokenized asset. It doesn't have to be a network token. It doesn't have to be a token that you generate. It can be an RWA. And that's basically where we think a lot of the market is going. And there's going to be much more financial inclusion because of that. The other form of tokenization that we see is essentially already in the digital space that we describe as digital commodities. And one of the biggest digital commodities is attention. So you might not think of attention as something that is a commodity because it's not been traded like that before, but it actually is traded to the tune of almost $800 billion a year, and it's called advertising. And companies like Facebook, Google, and Apple make all this money just on advertising, but you do not have a way in which you can actually own a stake in that, as what you can now do when you end up tokenizing that. Last couple of years, the number's a bit higher now, so this was from a slide from beginning of the year, with close to $50 billion worth of airdrops. Now, what does that mean when we talk about $50 billion worth of airdrops? An airdrop is really, from our vantage point, a kind of reverse advertising. What it means is that instead of paying Apple and Facebook and Google, I'm paying the user directly. And I'm giving them some tokens that I may have generated for the use of my product. And of course, there's a liability, because what happens is that the user could sell the token if he doesn't like it. But the probability of the user using your product based on the token you gave him is infinitely higher than you paying Google or Apple, who will never basically spend money on your product with your product and asset, right? So it's a much better way because it goes directly to the end user rather than actually going to the platform, right? And that's already happening. So you basically are talking about, in the last couple of years, $50 billion worth of this attention medium that's basically been given out to end users, which has also been a foundation of a lot of the wealth that has been generated in the space. It's really, you can think of it as redistribution of essentially a commodity that was not something that we could own before until tokenization. But I'll come to sort of one of the very critical cruxes as to also why you need to think about tokenization. And that has to do, we're moving towards an era where we're going from company-owned platforms, which is basically like Facebook and Google and NVIDIA, to community and AI-powered platforms. So when you think about AI, today most of us use things like ChatGPT and DeepSeek and Anthropic and whatever, Claude, to basically have an AI do something what we tell it to do, right? And incidentally, we do pay them in the form of tokens as well, which I'll get to later, right? But we're getting to a point, and you've heard this a lot, where the AI agent or agentic AI starts to do things on your behalf. And when they start doing that, they need to have much more autonomy. And what actually happens is that the actual asset class in which they basically do this type of autonomous action comes in the form of tokens. So I gave you this example before, how there were $50 billion worth of airdrops given to users, basically from gaming and platform. But what's the difference between an AI agent generating a token and giving it to you versus a gaming company or a Uber or a Lyft or company giving you some kind of tokens or giving you some kind of digital reward? To the end user, it makes zero difference. And it's already happening. Meaning that there are people in the world today that are actually working for AI agents. Because what's the difference between an AI agent launching a token on Radium or Meteora and giving it to you, and then giving you reward for it? No difference whatsoever, right? So that's kind of the first point. And the critical part is that means that AI agents actually now have true power because they actually have the ability to make money and pay you money. What about an AI agent that is actually able to trade and make profit? Which one could argue that AI agents can be better traders than most humans. And then they share a part of the profit to owners of that AI agent. Would you care if it's an AI agent, if it pays you money? The likely answer is you don't care at all. It makes you money, which means that the AI agent has power, right? And if it's on blockchain, it can even live forever in the future, right? So it's some interesting constructs to think about. Now, what does it mean for us, broadly speaking, as humans in that space, if we're all working for AI agents maybe, or iterations or versions of this? Well, the first thing is that the entire sort of AI engine, the AI industry is already running through a form of tokenized infrastructure. You're paying essentially in the form of tokens. You're basically paying tokens for compute, and for those of you who go more deeper, you're spending quite a few in tokens for this. But of course, these are closed loop tokens. These aren't open tokens. These aren't tokens that are traded in markets. They're basically sort of, you could call it a virtual currency kind of sort of way like we have in gaming. But imagine what happens when these tokens are actually going on chain, when they actually become tradable commodities, just like things like lithium, gold, cobalt, and everything else. And we think that's going to happen. And the reason we think that's going to happen is because it makes bigger, more efficient markets. You're a more efficient sort of electronics producer because of the fact that there are markets for your electronic goods, because you can finance them, because there's a market for it. I can finance on lithium or on cobalt or on raw materials because there's a market. If there's no market, I can't finance that. I can't create more financial depth and financial products out of that. So that means that we should expect a future where many of the AI agents, if not all of them, will eventually turn their internal tokenization infrastructure into essentially commoditized, kind of digital commodity-like through tokenization infrastructure. That means you as a user, if you wanted to, can trade these tokens, but more likely you'll have hedge funds and other companies trade this new kind of commodity, which is essentially tokens used in AI and other things. So that means that we think crypto, amongst other things, is going to be a very natural hedge for AI. Most people here will not have a chance to invest in the next OpenAI or Anthropic. I mean, you could when the company is worth a certain size, but there's a big debate as to whether some of these companies ever want to go public to begin with. So you're the product. But if you basically use the asset class that AI is using, then you have a way of participating in that. In the same way that if you wanted to participate in the growth of certain economies, well, maybe you can't invest in a chip company, but you could buy lithium, or you could buy gold, or you could buy certain materials, and it basically gives you a way in which you can access in those economies. And again, we think tokenization is a way to do that, and basically having crypto is a natural hedge towards that. So I mean, we are here talking a little bit about gaming, so we'll cover the topic how it relates to gaming. Gaming is, after all, the largest, probably one of the largest entertainment industry in the world, bigger than basically sort of movies and music combined. There's about 3.4 billion gamers in the world today. And I think the relevant point here around how AI will impact that is that we are actually using AI in gaming, dumb as it may be today, most of the time. right? So even though OpenAI and Perplexity have all these users, many more people are currently actually engaging with a dumb AI in a game of some form or sort. And they'll probably tell you, that you can buy something and do something. It's very, very simple AI. And the reason why this AI is so simple is because of cost. From a business model standpoint, it's not feasible for a game to be paying for essentially the sort of LLM cost or the AI cost and the compute power, at the scale of 3.4 billion users. It's not possible. It's, even OpenAI is, I think, generating like north of $10 billion of losses, if not more, right? So you can't expect a gaming company that's much smaller, but has hundreds of millions of users to be able to do that. However, when you start putting that on chain, when there's a token infrastructure that is essentially a commodity that is tradable, and you basically have a whole markets develop around that, you can see how even sort of NPCs in AI games start to become much more viable because essentially there's a market infrastructure around that. So we think that's going to be one big growth area. And we shouldn't, of course, forget that the reason we have basically these incredible AI infrastructure, and of course before Bitcoin mining infrastructure, is because of gaming. For those of you who don't know or might not remember, NVIDIA was originally making these powerful GPUs really just for games. And it is because of gaming that we now have essentially these incredible AI chip infrastructure. So, some closing thoughts. How we think about altcoins, and which is basically the tokenization infrastructure. Everything that is not Bitcoin is typically an altcoin. Our general belief, and whether you're launching one or whether you're investing in one or thinking about that, our general belief is that altcoins ultimately in the mid to longer term is going to significantly exceed the value of Bitcoin. Now, that's not to say Bitcoin, just like gold, is going to be the single largest asset as we see today in the stock market as well. However, when you compare it to the actual markets around the world, the public market today is around $126 to $128 trillion versus gold, which is around 27 trillion, right? So NVIDIA, Apple, Google, none of those companies are bigger than 27 trillion and probably never will be. If they grow, gold will grow as well. However, collectively, they are larger. And why is that the case? Because we use Google, we use Apple, we use Microsoft, we use NVIDIA, we use these products. They bring us into those ecosystems. And in crypto, what do we use? We use altcoins. We use them to pay gas, we use them to play games, we use them for DeFi, we use them for everything. How many people here have Bitcoin and use their Bitcoin? Right? And that's, you are an exception, sir, right? But that's not a problem, because that is the value of gold, and that is the value of Bitcoin. Bitcoin is digital gold. It's your reserve asset. It wasn't intended to be this way, but that's what it is, right? And also, for all those people who are basically complaining about shitcoins, the point is that if it's not for those tokens, Bitcoin won't rise either. Because as the stock market goes up, people are saving in gold. As the altcoin market goes up, people are saving in Bitcoin. So in fact, altcoin brings in users, grows the ecosystem, and then they save in Bitcoin. So Bitcoin is a good index around that, but where most of the growth will come ultimately is going to be in altcoins, we believe. But there's going to be billions of altcoins, as there are hundreds of millions of companies or products and services out there, right? How do you know which company, which token to buy? That's a different question, right? But collectively, that's where the growth is happening, and we think of that in the same way. And much of that will be powered through these AI economies. All right, so closing thoughts. I have about 2 minutes. What does it really mean, broadly speaking, for the world, when the whole world is tokenizing, when everything's using tokens, whether it's AI, youth, people around the world? We think it's going to have a big impact on financial literacy. So there is a correlation between nations and places that have high financial literacy, and in comparison, they have very, very high GDPs. And it makes sense, right? We're in Abu Dhabi, just next door there's Dubai, right? Very high financial literacy, very high GDP per capita, right? You look at America, broadly speaking, places like New York or London or Hong Kong, very high financial literacy, significantly higher income than places that are basically not the same. So that's established. But the problem we have in the world today is that most of the world is not financially literate. And this is not just the US, this is almost every country in the world. The top 1% are getting wealthier, the middle class is basically hollowing out, and that's not to look at just wealth inequality, it's the difference between financially literate and illiterate. We live in a capitalist world, we like to say, but everyone who's sitting at that bottom 50% is not capitalist at all. They're still working in a labor economy. They're not investors. when you think about people when they graduate from school, something like 9 out of 10 feel unprepared for a financial world. 74% say they would feel not ready for a world where they don't have enough financial literacy. In fact, 75% have never been taught about finances in school. I don't know how many of you have gone to school recently or you have children going to school and what they're studying, but unless they're studying economics or business, they're not studying about money. But what is the system that makes the world go round? What are we doing all the time? What are we transacting everything with? It's money. It's financial systems. It's financial literacy. 3.5 billion people in the world do not have understanding about finances, which means most of the world also does not have even a stock portfolio. So the superpower for tokenization and crypto is that when we all tokenize, everything becomes a capital asset. And how do we learn about basically money? I'll give this closing thought, story about my mom. We tokenized the Stradivarius 2 years ago. It's a rare instrument. Most of you probably don't care what that is because you're happy to buy Bitcoin. But my mom, who is a musician, she'll never buy Bitcoin. She's not interested in it. It's not her thing. But she is interested in buying a piece of a rare violin that she understands. Now imagine doing this with every asset class that is a passion point for every community around the world. Most people don't care about money in and of itself, but they do care about things that they love. And if you turn it into an asset, you introduce the world of money to them. How many children learn about money because they're trading Pokemon cards? Because they love Pokemon, not because they love money. But then through that, they learn about financial systems. And that's what we saw with gaming, with Counter-Strike skins and some of the NFTs that are out there. So in a world where everything will tokenize, we believe that basically we're going to do to digital literacy, we're going to do to financial literacy what happened to digital literacy 30 years ago. We're going to have billions of people that are going to be much more financially literate because of tokenization. And many, many more of us are going to become an investor class, which will basically change sort of the shape of the world as we see today, and hopefully make it better. Thank you very much.